Hey everybody, welcome to another edition of Midas Letter RAW. I'm here with my co-host. This is the lovely and talented Thelma, and she is going to be filling in for serious Ed Molesky. I wanted to start the conversation today with a discussion of copper. If you haven't been watching, copper surged to a 10-year, 12-year high of $4.80 a pound back in June, and today it's trading at just over $4.50, despite claims by the Federal Reserve that inflation is transitory. Now, copper is one of the fundamental ingredients in basically everything that has electronics in it. Every automobile, every refrigerator, stove, television, handset, everything has copper in it. Copper is in increasingly short supply because the grades at the world's largest mines are going down. And now we've just heard that Rio Tinto subsidiary Turquoise Hill, who owns 66%, I believe it is, of the Oyu Tolgoi copper deposit in Mongolia, which is the would be the third largest copper producing operation in the world when it goes live. Now the new Mongolian government has said that they want a bigger piece of the pie. And so it looks like they're not going to be launching in 2022 as planned. And that date is going to be pushed out pending a resolution to the reopened negotiations of who gets how much of what, when. The way it sits right now, the Mongolian government will not start to see a return on its investment until 2045. And interesting, while copper is at $4.53 as we speak right now, U.S. copper shares have dropped from a high of 27 cents over that last period since the high of copper went to 4.80 in June, and now is trading at 16.5 cents, which is a little bit disconcerting considering they're drilling. Though they did announce this week that they were going to have to stop drilling because the Dixie Fire, which is the largest fire in California, was bearing down on their Moonlight deposit. Now, fires are always a temporary phenomenon, so I don't expect that to be a long-term detriment to the drill program, and we should see some drill results soon. Bear in mind that this is a copper company in California, only several hundred miles away from Elon Musk Gigafactory, Nevada, that has 4 billion pounds of copper in the ground right there. So I don't see it being an option for the American infrastructure build that is now wending its way through the congressional process of $1 trillion invested in bridges and roads. I don't see that having anything but a positive effect on the price of copper in the near term and in the longer term. Certainly the shortage of the copper supply as a result of Mongolia's shutdown, or at least delay in the Oyu Tolgoi launch, is going to be a factor. And so we will come back to you with some more copper ideas. Follow us on Twitter, Instagram, LinkedIn, and Facebook. Make sure you never miss a show by subscribing to our YouTube channel and clicking on the little notifications bell. If you're interested in getting monthly actionable investment ideas in the cannabis space to your inbox, subscribe to the newsletter at MidasLetter.com. I've got some great guests today. Marty Haldane joins me again. He's the founder and CEO of Appraisals Now, also known as Anow, recently acquired by Voxter Analytics Corp. Trades on TSX Venture under the symbol VXTR and on the OTC under the symbol VXTRF. Full disclosure, I own a boatload of shares in Voxter, and I also have a whole bunch of options through another company that's providing marketing services to the company. We don't get paid in cash, but we accepted an option for developing some content for them. That's the extent of my exposure and my disclosure. I might be benefiting if the share price rises, so you should consider anything I say in relationship to the company biased. But yeah, I'm biased because I chose to be biased because I think that this company has a great shot at really disrupting the real estate transactional ecosystem. And I'll let Marty tell us some more about that in just a minute. I also have Shawn Dym. He's the chairman of Humble and Fume, trades on the CSE under HMBL. He's going to be joining me today. And last but not least, Chris Overholt, CEO and president of OverActive Media, trading on the TSX Venture under the symbol OAM. Cannabis news. What do we got? We got lots of cannabis news. Here's my big cannabis news. I actually had a visit on site here in Dunnville, Ontario, where I have a farm, and I met with the former chief grower for Canopy Growth Corp, as well as another guy who's kind of been in the business for a while, and we're going to build a cannabis extraction facility at my farm because I'm going to get licensed to produce nutraceuticals and edibles for middle-aged adults who don't want to get high. And essentially what I'm doing is I'm trying to spread the benefit of CBD that I've enjoyed since starting to take it on a daily basis some 2 years ago now. And yeah, I sleep like a baby. If I have a hangover, I just do one dropper of CBD and the hangover is gone. I'm fully functional, though I try not to have too many hangovers at this age. Joint pain from working too hard in the farmyard, all gone. And there's just a whole ton of benefits that I'm experiencing for myself. Obviously, I can't make recommendations as a non-medical practitioner. However, just wanted to put that out there. That's my big cannabis news. But in other cannabis news, one of the things that I find most interesting is that Tilray CEO Irwin Simon broadcast to the media that he is sitting on a $500 million war chest ready to make a deal for a U.S. cannabis company and stipulating that he's not waiting for legalization. Interesting, though, that they also reported in the same breath a net loss of $336 million USD for fiscal 2021, but a profit and a net income of $33.6 million for the fourth quarter. So that's pretty good. If I was a U.S. cannabis company and I was looking at Tilray, I would be thinking to myself that how great it would be to have that treasury and that company already trading. And there you go, you're public with a big treasury and you don't necessarily need to keep old management. I'm sure there's some kind of agreement that could be reached. But what a way to get public. Reverse takeover on Tilray. They're looking for a buyer. So there you have it. If you've got some revenue down there in the U.S., let's do a deal. Hey, let's get high. Hey, let's take the stock price higher. What? Anyways, I don't own Tilray. They're not a client. They never have been. I've never owned Tilray. Actually, sorry, I shouldn't say I've never owned Tilray. I've traded in and out of it a few times back in the last couple of years. But yeah, so other news. After years of legal medical use, Ohio gets its first recreational license. How about that? The president of Colombia signed a decree authorizing export of dried flower. That's going to benefit firms like Chiron, who we've been watching. Columbia Care is down there as well. And there's some other companies that are all going to benefit from the ability to export dried flower. Colombia is probably one of the cheapest jurisdictions in the world. Our last guest from, I believe it was Columbia Care, hope it was Columbia Care, told us that he was, oh no, it wasn't Columbia Care, it was Flora Growth. The CEO told us that he was growing cannabis for 6 cents per gram, which is, wow, that's cheap. Yeah, and in other news, the UK's largest tobacco firm, British American Tobacco, who has a stake in Organogram, says it sees cannabis as part of its future as it tries to extricate itself from the legal difficulties associated with selling traditional cigarettes. No big surprise. Wow, it took them long enough. My God, I'm surprised tobacco companies didn't take over the whole cannabis industry here. Might be happening yet. If you like the show, you'll love our website. Visit us at www.midasletter.com for interviews with key CEOs, cannabis news, and to subscribe to our newsletter. Here's Marty Haldane. Marty is the CEO of Anow, which was acquired by Voxtur just a couple of months ago. All right, my next guest is Marty Haldane. He's the founder and CEO of Appraisals Now, also known as Anow, part of the Voxtur Analytics family of companies. Marty, welcome.
Hey, thank you. Nice to be here. Thanks for having me again.
You bet. It's good to have you back. Marty, we'd love to hear, how is the integration into the Voxtur Analytics platform going for Anow, and how is that contributing to the Voxtur sort of revenue stream?
Yeah, this is something that's hard to answer in a short amount of time, but no, it's been fantastic. It has opened up so many new ideas, processes, access to new fantastic people. Our entire team at A now has been brought over into the Voxtur world, and then now augmented with a whole bunch of new fantastic people from a sales standpoint, marketing standpoint, technology, compliance, legal, all of that stuff. So I'm actually thrilled that when we came from the size of company that we were before, growing very fast and doing really well, and now we have all the support that we can focus on so many new things and bigger projects. It's been phenomenal. We've never been this busy in a very good way. So
Right.
it has worked out very well.
Great. So then, does the number of appraisals that you're doing, has that been affected by, since you've joined Voxtur, and has it been affected by the pandemic?
Yeah, so since we joined Voxtur, we've on the appraiser side of things, yes, volume is still up. That is increasing quickly every month. But then on our different products that we sell to lenders and appraisal management companies, we have we have deals right now that are double what we've been doing in the past. So here we are, we've been growing, and it's a really good thing that we built our technology to be very scalable. But now it's increased immensely, and some of the it's very fun now with Voxtur behind me. And when we walk into a really large lender, it's not, here's a now private company from Canada. It's, oh, this is a now with Voxtur, and they listen to you a heck of a lot differently. And we're getting a lot of traction that way. So volume is way up.
Sure. How does appraisals fit into the Voxtur ecosystem, and what is the value proposition for users of the Voxtur platform now?
Yes, so that's really what Voxter what is and is becoming, is this platform to connect not just valuations or appraisals, I should say, but valuations as a whole, beyond the title and the tax stuff that we could talk about too. But Voxter has, with A now and the other technologies that we have, we've been able to combine them together into a really fantastic ecosystem now, where we've got this very robust technology from what A now brought, and then what say Clarosity, Voxtur Valuations had, and bring it under one roof, under leadership that has one direction, one vision. And we've been able to now just grow in a way that's so much faster, so much better. And we've got the just all the different pieces, from just a pure technology standpoint, to a services standpoint, so that we've got an entire appraisal management company and a technology company, and they work side by side, independently or together. And it just it's very fluid. It's easy. And then when we talk about Voxter, you can just go to a lender, or into the capital markets, or to someone who needs a valuation as a whole, not just appraisals, BPOs, appraisals, evaluations, and we can just plug us in through a really great API. We call it the brain sometimes internally, and no matter what you need, it's just super simple. You need a full appraisal, you need a BPO, you need evaluation, and all of a sudden you're not going to several different companies like a lender has in the past. You're just going through one Voxter product. And now we can also source other things on there. All the different valuation products, the workflows, the integrations is all simple and easy to set up. But then we can also branch and have the title stuff and the tax stuff and all that going through Voxter as a whole. So they did a really good job at combining these companies together. And I mean, Voxter leadership. And now we have the technology that just anything valuations. You can call it an appraisal, like I said, a eval, a BPO, hybrids, all these different terms that are coming out right now. We support the workflow for all of them.
Hmm. Interesting. Is the moratorium on mortgages and foreclosures in the United States and Canada, is that something that affects the sort of transactional flow of Anow?
The nice thing is no matter where it's up or down, as there's a need for appraisals all the time. As things are moving up and there's default, there's still appraisals that are needed. There's actually more BPOs that are needed as default goes away and then refis go up and the purchase market goes crazy. There's still appraisals. So that's the nice thing about the valuation industry is it's protected from those different things that happen. And there's always a need for evaluation. So whether you're getting ready to deal with the default, you need to know what it's valued. Sometimes you need two appraisals on them and two valuations, and sometimes more. So that's the nice thing about it is we won't say, okay, no, we're affected by it because there's less purchases and refis in say when there becomes a lot of defaults that flood the market. For us, it's business as usual. We get more work on the BPO side, and the appraisal still happens too.
Yeah. Okay, so then how have the actual numbers for Anow been affected in terms of volume of appraisals being done?
Yeah, so since April, we have gone up by about 20% in appraisal volume, and that's just on our flat appraisal product. And then on our lender products that we have, about 200%.
Wow, 200%. That accrues directly to Voxter's bottom line, I guess.
Yes, exactly. Yeah, and those are because there are two different models that we have. When we have our appraiser product, if you were to look at the anow.com website, we have a subscription service for appraisers. They pay a monthly fee for access to all these great features that help them run a better business. But it kind of goes back to the story of Anow as a whole is we did that for appraisers, made them very efficient. Then we go right to the lenders and say, hey, we've got this fantastic base. We've got good technology, but with these people who use this technology and this the appraisers all across the world, and now it's very easy integration, and that's transactional fee that goes along with that. And we have two very great products around just facilitating the workflow. We've got a patent pending process where an appraiser can turn a beacon on, and then that's the appraiser putting their hand up. So they love it. They can say, hey, I've got an opening in my schedule. I'd like to make some more money today. And they can schedule them right there, all the way through the whole workflow process down to our separate product that we have for the lenders that's also transactional, where we do automated reviews on all of the appraisal files that get sent in. And we've got thousands of complex rules that'll scan the appraisal, compare it to public records, MLS information, and even an artificial intelligence that we built that'll take the photos and tell you what's inside the photos, what the condition of the property is, what matches if they've been found on Google before, and all this great stuff that really helps with not just facilitating an appraisal and making that faster, but cutting down on the other end of things when they come in and the review process and the revisions requests and all that stuff to just really streamline everything.
So can you tell me to what extent the competitive landscape has changed in the appraisal segment of the real estate ecosystem? And are there any big competitors out there that sort of cause you to lose sleep at night?
It's a competitive space. It's a big market. It's one of those, the appraisal market, it's one of those things people just think it just happens behind the scenes, because it does, but it's a huge process in a very large multi-billion-dollar market. But there's obviously the big ones out there, like CoreLogic, that has several appraisal products and does a lot in this space. But then, to be honest with you, there isn't very many customers that make me lose sleep. We don't like to chase competitors very much. I mean, competitors do what they do. We like to focus on what people are asking for. And it's, what are our customers saying? What are the lenders that we're talking to needing? And let's build that for them. We're a very development-focused organization where half of our team is software developers. So we have obviously the sales and marketing and support organization, but we're constantly pushing just thousands of releases to our production server every year. So we don't sit and dwell on the customers too much. Obviously, I'm paying attention and watching and seeing, making sure we're doing everything that we need to be doing, and nobody's catching us from certain. But no, nobody causes me to lose sleep.
That's good to hear. Marty, that's a great update. We're going to leave it there for now. I thank you for your time, and we'll come back to you soon. Have a great day.
Awesome. Thank you. You too.
All right, so here's Boxster trading now. It's been under pressure since the hold came off of that private placement back here. We are starting our marketing program imminently, and so that will be what might be driving some of the new interest in the stock. This is where I entered back here at 65 cents. So the stock has had a run and come down, but I haven't sold any Boxster shares because I'm a long-term believer in the company. And that's just the bottom line there. Boxster management keeps playing down the significance of their quarters. They have another quarter coming in 2 weeks. They've been playing it off as flat, but 30% Q on Q growth quarter after quarter is hardly flat, and that's what they've been delivering. So we'll see what this quarter brings. Gary Yeoman, executive chairman, and Jim Albertelli both seem to be consistent on the message that Q1 2022 is going to be the big transitional quarter. So looking at the chart and the way this company is traded, it looks to me like this could be a very auspicious entry point. So getting back to the question of when do you time things, you want to buy things when they're cheaper, not when they're expensive. Certainly Boxster looks cheap here. It's as cheap as it was when I got first involved back in February. However, that being said, one could make the argument that it's going far lower. I beg to differ because our marketing program is going to start up and they're going to announce another great quarter, I'm sure, in a couple of weeks. There you have it. Let's see, what else? So the other interesting thing we're talking about Tilray and Irwin Simon. Irwin Simon was brought in as the CEO after Vic Neufeld on that, and Aphria merged with Tilray. Now Irwin's the CEO of Tilray, and my next guest was a director of Aphria prior to its merger with Tilray, and has now started his own company. Shawn Dym joins us now. My next guest is Shawn Dym. He's the founder and chairman of Humble and Fume. Trades on the TSE under the symbol HMBL. Shawn, welcome.
Thank you for having me.
You bet, Shawn. So you're formerly a board member with Aphria, one of the earliest companies in the whole ACMPR game. What can you tell me about your new venture with Humble and Fume?
Yeah, Humble and Fume is not really a new venture for us. At Greenacre Capital, it's been a portfolio company since 2017. At the time, it was a provider and a distributor of hardware and accessories in the cannabis space, only to smoke shops, and we've subsequently expanded that to include dispensaries in Canada and looking at the same opportunities for distribution of cannabis products in the United States.
So you're not in the retail side, you're a wholesaler.
Correct. We distribute primarily products manufactured by third parties, both cannabis and accessories. And here in Canada, we do have our own line of concentrate products, both vape products and solventless rosins that we do make ourselves in partnership with a licensed producer, 48 North.
So you're what we would refer to as an asset light operation then?
Correct.
So what was the compelling logic for your company to be configured like this?
Yeah, so in terms of the go public transaction, it really was a focus on just having meaningful opportunity to grow the business in the United States. At the time of our initial investment at Greenacre Capital, the business was doing 17 million in trailing 12-month sales. Last year, we reported sales of $61 million, and we've been growing at over 50% during calendar 2021. So if do the math, tracking to somewhere around 100 million in sales in calendar 2021. And so we see tremendous growth opportunity in the United States. That United States now represents over 50% of our revenues, and we see opportunity in US THC distribution that will ultimately need greater amounts of capital. And so the reason for the go public transaction was to leverage capital markets to dramatically accelerate our growth.
So this is first and foremost a brand play.
Correct. I think it's being able to provide sales execution to support predominantly external brands, but also our in-house brand.
You know, it's funny, Shawn, with the absolute lack of profitability in the cannabis sector, both in the United States and Canada. I like this approach. It seems like it's a smart approach. How do you attract retailers to pick your brands over other brands?
Yeah, I think what we offer retailers is, what I'd call closer to a one-stop shop for providing all their needs for what they're selling. So whether that started with accessories and now we have a broad portfolio of cannabis products. If you look at the Canadian market today, there's over 10,000 SKUs. I think approximately 750 licensed producers that are able to offer products. And if you put yourself in the minds of a retailer, they certainly don't have the time that they could afford to understand all the different products that are available. If you look at Ontario through the OCS, there'd be thousands of SKUs. And so what we do is provide them the opportunity to understand the portfolio that we carry and simplify the purchasing process for those stores and drive value through same-store sales inside of those stores.
Your growth rate is extraordinary as well. What is it about this whole approach that allows such rapid and consistent growth?
Yeah, I think there's a combination of factors. One, we've just experienced tremendous growth in the cannabis industry, which I think will continue certainly for the next decade and beyond. And I think our understanding, I've been involved in the cannabis industry for the last 8 years, as you mentioned previously, a board member of Afria. And I think it's understanding, how consumer tastes and preferences are evolving and being able to meet customer needs. And that's the benefit of the distribution platform is that, we have the flexibility to push different levers as we continue to grow and as preferences change. And really, we have an offering that meets all those needs. And I think that's really what's the driver of our growth.
Within the various categories of cannabis products under your umbrella, which do you see as having the brightest future?
I think the brightest future really sits around cannabis distribution. I think it's not a well understood area of the industry. If you look at alcohol as an example, the alcohol industry, roughly 10% of all sales are driven by distributors. And so really what that does is that provides the opportunity to place products in the hands of retailers. In the cannabis market, we see in the US as an example, currently it's about a $20 billion industry. We believe that'll ultimately grow to $100 billion. So it's greater than 5x growth. And when we look at the distribution side today, it sits at around sub $1 billion industry. And we think ultimately that'll be 10 to $15 billion. So I think there's 10 to 15x growth, which, very, very hard to find that in any industry, but with the rapid onset of legalization and, the embedded demand in the industry, we think that's ultimately the growth driver.
So the United States markets are all fractured. There's no interstate commerce. Does that mean that you have to source the cannabis products that you distribute into the retail networks in each individual state? Does the cannabis have to be sourced from within each individual state as well?
Yes, it's definitely a market by market approach. We're starting to see licensing opportunities. So products, as an example, that work in California are now being licensed to operators in other markets and being able to leverage brand awareness to drive sales and adoption of products that seem to resonate with consumers.
And is your focus exclusively recreational products, or is there a medical component to that as well?
There is, from an accessories perspective, there's definitely a medical aspect to the opportunity, but it's our belief that adult use or recreational is certainly by far the biggest opportunity.
Okay, so dried flower has been the mainstay of product sales across any retailer in the cannabis space. Are there any products in the Humble and Fume sort of universe or anywhere in the cannabis universe that you see coming that might displace dried flower as the number one selling product?
I don't know what the future holds, but it's my belief that dried flower will continue to be the largest category by market share. If you look at what happened during the pandemic, we saw pre-rolls decline in market share and products like edibles increasing share. That's since sort of settled back to to levels pre-pandemic. But, there's definitely, it's a new industry. There's tremendous opportunity for product innovation. And so there's a possibility that we'll see changes to market share by category. And what's valuable about our platform is as those changes, our product portfolio is so diverse that we cover all the different categories. So if one shifts to the other, we're able to capture those gains and still continue to grow.
So across the whole cannabis universe, especially in Canada, THC and CBD is not really well differentiated or understood as a product. In fact, I can't find really great CBD products as a daily CBD user in any retail environment in Canada. Is there a point in the future where CBD is going to be able to be marketed as its sort of therapeutic, non-psychotropic, non-recreational, otherworldly product that it kind of is?
Yeah, so we already do distribute CBD offerings in both Canada and the US. The US is far more open in terms of retailers that are available to carry it. In Canada, it sits under the Cannabis Act, so it's only being able to be offered in dispensaries. And so I ultimately think that will change and it will be available on pharmacy shelves. And I think when that happens, it will certainly drive greater demand as you're missing a portion of the customer base who may not be inclined to go into a dispensary for needs that are probably wellness or medical focused and unrelated to typical adult use or THC consumption experience.
That's a great introduction to the company. It sounds like you're really making progress there. We'll leave it there for now. Thank you very much for your time today.
Yeah, it's great. Thank you very much for your time.
You bet. Bye for now. Well, so there's Humble and Fume's chart. That is an ugly chart. There's just no way around that. So yeah, I guess if they're going to grow sales, then this would make it a good entry point now. I'm certainly interested in following because at this price it's cheap. I'd want to look at the capital structure. I'd want to see if there's a super voting structure in place. All these cannabis companies seem to be enamored of the super voting structure that neutralizes the votes of insiders and retail shareholders. I'm not a fan of that. If I see a super voting structure, generally I run like hell and I have no further dealing with the company. But Humble and Fume, obviously it's got the same model as CanMart, as High Tide, sort of. So those guys are doing pretty well. So that's a company. This is a company I would look at if I like the capital structure, and I will be advising subscribers on that. So yes, my next guest is a gentleman who was formerly the CEO of the Canadian Olympic Committee. Chris Overholt, CEO and President of OverActive Media, trading on the TSX venture under the symbol OAM. Next up, I have Chris Overholt, CEO and President of OverActive Media, trading on the TSX venture under the symbol OAM. Chris, welcome.
Good morning, James.
Chris, what is the business of OverActive Media?
Yeah, we're in the business of esports at the highest level, and the way I often describe it is, if you think about the many tens of millions of people all over this country and all over the world that love hockey, again, it's played at multiple levels, but at the apex of that game's highest expression would be the National Hockey League. We own franchises in 4 different leagues that play at the highest competitive level in the world. And so analogous to traditional sport, the model I often reference is that we're building the Madison Square Garden or the Maple Leaf Sports and Entertainment with esports at our core. Mm-hmm. And again, as we grow this company and develop its vision, it's becoming increasingly clear to us that we have an opportunity here to really redefine what it is to be a 21st century sports media and entertainment company for today's generation of fans who, of course, as you would appreciate, are choosing to engage in sport and media and making different choices different than my generation and ours.
And how do you monetize that?
Yeah, it comes through a number of different streams, but I would again encourage you to think about it as traditional sports model, and I'll use Maple Leaf Sports and Entertainment perhaps as a best compare. So that organization owns franchise teams that play in the most important sports leagues in the world. That's true for us as well. We own franchises that we've paid for upfront to acquire the protections that come with owning a franchise in a city-based or regional market. We own the exclusive rights to develop our position, our brand position, our teams in our market. And most importantly, we get to share in all the revenue streams that the league produces, just like the NHL, just like the NBA. So we drive revenue streams locally out of sponsorship and various media content opportunities that we develop in around our team, our brand, our players. But we also get to, again, sit inside the enterprise growth of these leagues as they take shape. And so we share in the marketing partnership deals that the league's done, in the sponsorship deals, in the licensing, in the broadcast rights deals, in all of those ways, again, just simply analogous to traditional sport. These are the most sustainable business and economic models available to anybody invested in the esports space today. And we are distinct insofar as OverActive Media has 4 franchises. We are, in fact, the only company in the world that owns 4 franchises in the only franchise leagues that are available in the global ecosystem of esports today.
Oh, okay. And which teams are those?
Toronto Defiant and Call of Duty's Toronto Ultra. Toronto Defiant plays in the Overwatch League. Again, Toronto Ultra play in the Call of Duty League. We own 2 teams in Europe as well that play in the European League of Legends. That's our Mad Lions brand playing out of Madrid, Spain. And we also play in a league called Flashpoint that we own, in fact, with other team-based organizations. And that game is a game called Counter-Strike.
What is the compound annual growth rate of the global esports audience at this point?
Yeah, so I'll point you to a couple of things. The growth projected when we started to get into this business back in 2018 was projected to be double-digit CAGR growth from an audience perspective. That has been true and is predicted to continue to be true for the coming years. Similarly, the revenue has been growing for the global industry at a double-digit rate as well, heading towards 1.5, 1.6 billion by 2023. But yet esports still relative infant as compared to the broader gaming community. So the industry of gaming has grown to be a $175 billion global business. The industry of esports as an expression of that is about 1.75 billion today. So we see massive upside, in fact, arbitrage opportunity on an average revenue per fan basis that will give OverActive Media, we think, a leading position in the global space.
And who would be your biggest competitors in the space?
Well, it depends how you think about it or how you ask the question in the context of share of wallet or who we compete with in these leagues. So, I would say, and back to the question you asked earlier, this industry has grown now. The global gaming industry has grown now to outstrip the movie, music, television, all those traditional forms of entertainment that we've grown up with and enjoyed for all these years. Those are actually not as significant an industry as the gaming industry is on a global basis today. So I suppose in the context of who we compete with economically around the consumer share of wallet, we compete with those industries head on. But actually, what you're starting to see is the mashup that exists around the esports culture and the gaming culture broadly. Again, aligned to music and in some cases even traditional sport. Mm-hmm. In the leagues that we compete in, we compete with the major cities, as you would imagine, in North America. Again, these franchise opportunities are held in major cities here in this side of the water, in cities like New York and Miami and Chicago and LA, of course. So we play teams from other leagues or from other cities, rather, in the league. But these are global leagues as well. And so they stretch to, in the case of Overwatch, for example, there are 4 teams in China. There's a team in London, in Paris, and in Seoul, Korea. In the case of Call of Duty, a team in London and a team in Paris. And we, in the League of Legends, we actually play in a European-based league, and so play teams from all over Europe. So again, these are global leagues, and the reason that's important is because as a result, they scale massively. So these are global audiences for these games. They're not particular to North America. and they're played on platforms like Twitch and YouTube that scale native digital. And so, I'll give you this example. In my background, of course, is traditional sport. I started with the Raptors in 1996. And in those days, we were broadcasting the Raptors on City TV. We would be fortunate to do a television audience on a national basis in those years. For a midweek game, we might do 45 or 50,000 watching it at that time. Our Mad Lions played their their first season opener in Europe this year to a concurrent viewing audience of more than 500,000 people. So when you think about that audience, how it scales global and native digital, and when you think about the fact that the brands that are invested in our business are, and as they always have been, focused on the development of that 18 to 34 market, that audience is taking different decisions than you and I took to engage in sports media and entertainment. And OverActive Media is positioned to deliver that audience to those brands. So for that reason, we're starting to make really significant headway in the local sponsorship element of our business. We have now almost 20 marketing partners around the world, including 10 or so in Spain and another 10 here in Toronto and Canada. Our most recent announcements include TD Bank, Kraft, Bud Light. Bell is our seminal marketing partner, our premier and founding partner here in Canada, and a very significant investor in OverActive Media. So we've got a really, really great position carved out for ourselves here, and feel pretty great about what we've been able to accomplish so far.
Chris, I'm curious as to whether the audience for esports, which is essentially people watching other people play video games, is that audience growing at the expense of the conventional online, or rather the conventional broadcast viewing sports audience, or is it happening in addition to that audience, or a combination of the two?
I think both questions or statements are true. So it is the case that that the audience that is starting to take shape around esports and broadly the gaming industry, and around platforms like Twitch and YouTube and TikTok and others, these audiences are doing so at the expense of traditional sport, and I would say broadly traditional media. This generation of 18 to 34, I would say younger millennials and new Gen Zs, and certainly we would expect in behind them the Gen Alphas. They spend their time watching YouTube and engaging on again platforms like Twitch at the expense of consuming traditional sport and media as we've grown up to know it. It's also the case that statistically these major leagues, these traditional sports, are aging out, and the reason that's relevant, without knowing exactly how old you are, I'm in my mid-50s now. I've been watching traditional sport for a long, long time. But I'm not the target audience for brands like Bell and TD Bank and Skip the Dishes and Canon and Universal Music and all of those that are engaged with us here and around the world. That audience that they're seeking to get to is the 18 to 34 audience, the audience that, again, is on these platforms. And so if you're the NFL or the NBA or the NHL and you're looking in on your audience today, again, it's typically approaching or having already surpassed the age of 50. And brands are not interested in getting to that audience so much as they are the life cycle of marketing that comes with the 18 to 34. I'll also say that, evidence of this is supported by those that are invested with us and around us in these very same leagues that we've taken our position in. So as an example, the Overwatch League, the Call of Duty League, we were invested in this early, but so too was Robert Kraft, who owns the New England Patriots. He was, in fact, the first purchaser of an Overwatch franchise. Philip Anschutz, who owns Arsenal, the Kroenke family, the Wilpon family in New York, the Wilfs in Minnesota, Ted Leonis and Peter Guber. These are the biggest owners of traditional sports business and teams in the world. And they're all invested, not just in esports, they're invested in the very same leagues that we're invested in. They sit at the Board of Governors table with us in these leagues. And that for us is a pretty good indication that we're on the right track. They see the same things that we do, that their audience against traditional sport is aging out. And while nobody on this call is signaling the demise of the NFL or the NBA, it is the case that at a minimum, if you own a Major League Baseball team, a hockey team, or an NFL team, You have to be thinking about your next generation of fans, where they're spending the time and what they're consuming in the way of media. And the simple fact is, it's esports.
Mm-hmm. Wow. Fascinating story. This sounds like, it almost sounds to me like esports is just on the cusp of going mainstream. And for our audience who are primarily investors, it sounds like this is sort of getting in on the ground floor at this point, just before that transition to the mainstream. Is that more or less accurate, or are we away from mainstream adoption?
No, I think I would encourage you not to think of it as something that is arriving to the conversation, but rather it has arrived. The amount of money and investor money that it's attracting, the support that it's receiving from media broadly, and certainly specifically on these new platforms. It's not only having arrived and starting to establish itself in the mainstream. Anybody who might be watching your show at this moment would only need to speak to any of those in their household or in their extended family. Again, if you went to a son or a daughter or a niece or a nephew and asked them about platforms like Twitch or YouTube, of course, if you asked them about their favorite esports teams or their favorite influencers, this has been going on around all of us in our 50s for years now, frankly. And yes, so we have a first mover position in all of this. And again, evidence of the support that we've received as a result of that first mover position. As you mentioned, we just listed on the TSXV last week, but privately up to that point, we've raised more than $100 million to establish our company, build out our franchise holdings, and work up our operating group to run this business for the next decade or more. So again, we're well positioned in all of this. We're born and bred right here in Toronto, Canada, and with a global headquarters in Liberty Village. And we're excited about where we're headed with this business. Again, we really believe we're building a multi-billion-dollar 21st century sports media and entertainment company for today's generation of fans.
Okay, Chris, that's the great introduction to the company. It sounds like you're really making progress there. We'll leave it there for now. Thank you very much for your time today.
Thanks, James.
You bet. It's funny with all these esports companies, we've yet to see one really go into unicorn mode. And I think that the whole industry will be uplifted by the first company that does go into unicorn mode. And certainly OverActive Media presents itself as a potential contender. Okay, so yeah, we're waiting for OAM to perform. It's just listed recently. And so early days for this company, trading at $1.63 is that? Can't really read that from here. But anyways, so we'll see how that goes, and we'll have Ian back in due course. I'm going to answer a few of the audience questions. I really love it that people actually think I'm smart enough to say something smart in response to their queries. Nah, just kidding. Okay, so Robert Mack says, "Hi, James. Once I find a company, how do I time it properly? Well, now, that's a question that the regulator would prefer I refer to an investment professional, a registered investment advisor in your jurisdiction. However, I'm going to tackle that one myself today. In terms of timing your investment, you first must be arriving at the decision to invest because you think that the timing is appropriate. So it's not about saying, "Oh, I like this company. I want to get in at the right time." You should be saying, "Wow, now is the time to buy this company because of this event, that event, and this event." And that has to also coincide with your investing style. Are you investing for a longer term, 3 to 5 year, maybe 10-year exit? Are you a long-term investor? Are you an event-driven swing trader where you're going to own the stock, buy it today, and hope that when the earnings come out next week, they actually take the stock higher and you hold it for a week and sell it for a profit? Or are you a day trader? You're going to place a trade in the morning and exit in the afternoon, or place one in the afternoon and exit in the morning. Either way, the timing of it is more determined by your trading style or your investing style, and should be governed by your investing plan, which if you don't have an investing plan, an investing plan should be put together in a way that takes into consideration how much time you have to invest, what's your risk tolerance profile. If you're 70, you don't want to be taking moonshots because you don't have there's no reason to make a quick score on $1 billion. If you're 20, you probably can put more capital at risk, and you shouldn't probably just go into conservative investments and limit your exposure to high impact startups and related things. That's, of course, my opinion. A regulator or particularly somebody who works for a bank would tell you that you should just invest in their mutual funds. And okay, so that's my answer. Herman Hartner wants to know, have I seen any AI or data analytics companies I like besides Voxtur, since I am looking in these sectors? I haven't seen anything that has such a systematic plan as Voxtur does, and I am obliged to disclose at this juncture that I'm a shareholder of Voxtur, and I am a participant in an option package that a consulting company has to them for marketing services. So I stand to benefit if the stock goes up, and therefore you should consider anything I say in the context of Voxtur in the context of advertising. That being said, I haven't seen any companies that are going about the disruption of a legacy financial ecosystem quite like Voxtur is going about it does with real estate. If you're enjoying the show, subscribe to Midas Letter on YouTube so you stay up to date on everything investment. Nah wants to know, how closely are fundamental analysis and technical analysis related? I like to joke with Ed, who's a technical analyst, and I like to say, Ed, technical analysis is a great way to predict what's happened in the past. And that's kind of the way I kind of sort of project a preference towards fundamentals. However, fundamentals have become corrupted by the various influences of quantitative easing, of the largest capital positions that control financial markets are able to move markets at will. They are the ones who keep the gold price suppressed during times of U.S. dollar weakness. They are the ones who drive copper prices higher when it suits them and lumber prices. Anyways, so that's conspiracy theory, and yes, it's a theory. But better to believe, is it more naive to think a theory exists or to think that one does not? So fundamental analysis are basically the events and milestones and accomplishments of a company that you analyze to make a decision about its value, whereas technical analysis is a scrutiny of the trading patterns and the data and what those patterns mean for the imminent future. So technical analysis generally is a more immediate term analyst tool, whereas fundamental analysis is a longer-term investor tool. But however, technicals will reflect what happens in the fundamentals, and the fundamentals will reflect themselves in the technicals. A case in point, the price of oil soared when the refinery in Iraq was under attack. So that's a case where the technical indicators start to demonstrate what the fundamentals are already broadcasting. So for me, fundamentals, if you can look at fundamentals across the macro picture, you're in a far better position from a long-term investor's perspective who's looking to ride value based on growth of income, revenue, and markets, as opposed to a technical trader who is just trying to exploit short-term swings in price and volume based on partially what happens in the fundamentals, but also what's happening behind the scenes in markets. So how closely are they related? Well, they're both used to predict the stock market. They both are just tools in a vast toolbox, and they are both no better than 50-50 at being accurate in terms of delivering actual actionable investment intelligence. At least that's, again, my opinion. So we'll leave it there for now. I appreciate everybody watching. Don't forget to write me, jwest@midasletter.com. Don't forget to like, subscribe, hit the notification bell. Basically, spam the crap out of me so we can spam the crap out of you. And have a wonderful weekend. Thanks for watching.